we get the right thing, screen will turn black. One moment, just one moment, please. All right, just one moment, por favor. I'm going to show you something that's going to blow your socks off. I'm going to show you something that's going to blow your socks off. Two things. One from our boy Eric, and one from your boy Mark. And I'm going to prove to you that the market drop is not only going to happen, but it's imminent. That's the only thing that matters, right? It's one thing to say the market's going to have a down move, and it's like, yeah, I know, Captain Obvious. All right. Am I good? Am I live? I'm live. All right. 2, 1, good. All right. Ladies and gentlemen, I'm going to offer you proof that the market is going to correct, and not only correct, it's happening soon. And all I see is red as I part the Red Sea as the trading Moses. See what positions I'm opening, how I'm attacking the market. I already have 8 live put positions open, including a couple I opened yesterday, a few I opened today, and I'm going to probably open up another 6 to 10 tomorrow, especially if we gap up. I'm going to show you something that's going to blow your socks off. Our precise daily stock levels, our game plan in Forex, as well as our full stock analysis. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. I'm going to show you something unique that no one else is showing you out there. It was actually brought to us by a member of the room, and I took it a little deeper to the next level. So thank you, Eric, for sharing that with us. And I'm going to show you something just really, really cool here that is going to blow your socks off, including a technical algo line on a weekly proving why the market's going to fall, something that uniquely happened last week when 2 weeks ago when we predicted the market bounce and we caught the dead bottom, and now we're going to catch the dead top, and I'm going to show you how we're going to do it. But first, there's something that you got to do for me. It's a give and take, Melnick. Melnick giveth and Melnick taketh. First, you must agree to hold completely harmless and not liable to anything you read, see, hear, think about, dream on this video. You must write this entire thing down that you see on your screen on a piece of paper. Pause the video and write it. Then you must write, I will not hold Mark Melnick liable for anything. Then you must sign your name, have it notarized, and then kindly, if you can, frame it on your wall and find some space on your wall to hang it up. And only if you do that, may you hit play and continue watching this video. And if you do not agree to that, please, I demand that you kindly exit this video immediately. Thank you so much for agreeing to that. Now, since you did something for me, I feel almost obligated that it's only fair if I do something for you. Now, I remember there was a time in the triple Qs, and we have a video that I did. This is Monday, December 24th, when you saw the market bottom here. I don't care if you're using the Qs, spiders. Let's call the spiders Qs, doesn't matter. Same chart, pretty much. I was using the triple Qs. And on Sunday night, on December 23rd, right before this day, I was talking about my $100,000 put position to be. We did a video, look at the Sunday video right before the market open of the 100,000 option bet to be, where we were just loading up calls in the market, only to watch the market explode the next day, letting us cash out for massive gains. Of course, depending on how you took it, how was your size. For me personally, it was massive gains. And now all of a sudden, you see me talking about the market bearish. So yesterday, right over here, I opened up two positions, sort of quasi one because I only got a one contract fill on General Electric, despite the fact that it plummeted this morning. Um, but I basically opened up an Apple put spread and a General Electric put spread here. And then today, right before the bell, I went ahead and I opened up three put spreads, which I'll share with you. And I'm going to share with you what my account looks like. I think it's very easy when people have swing accounts to say, I'm only looking for certain setups, or I'm only looking for these 10, 5, 3, 1 chart pattern, this secret chart pattern. And they could show you that, but there's a difference when somebody is showing you exactly what they're doing in real time with their entries and exit. It brings it to the next level because whether I'm right or whether I'm wrong, I'm putting my money where my mouth is and I'm showing you exactly what I'm doing. Anything else is called a lack of transparency. So I am going to show you exactly not only the put positions I open, the price I got filled at. Not only am I going to show you the price I got filled at, but if you are a Newsbeat Live member, that's the only way I could get this information for you. When I open up another 6 to 10 bearish put plays in the market tomorrow, I'll only be able to give it to you intraday if you have access to my live Twitter or room where I post this information. But if you don't have access, fine, I'll still share it with you, but you are going to be a little late to the party. As you guys know, I was talking about puts all week. I want to show you something that's going to blow your socks off. So, what we're going to look at is the NIMO. And the NIMO, it's a weekly chart of the NIMO, and all I see is red. All I see is red, and I have 8 live put positions. One of them is old and probably going to expire worthless. But with that being said, I do have 8 live put positions on the table at the moment, and I just want to show you something. You see, so here's a sloppy looking chart of the weekly of the NIMO. Now, I want to explain to you just real quick. I'm not going to get into deep details of what the NIMO is, but I'm just going to briefly explain it to you. And what it is it's basically it's a way of showing you in layman's terms if the market is oversold or overbought. If it's oversold or overbought. Now, this was an indicator I wasn't using when we accurately, the day before, called the bottom of the market, loaded the boat, and crushed it to the upside. Now, granted, I would have crushed it a lot harder had I held every single position stubbornly to this day off that recent bottom, but I didn't. But I still did extremely well. With that being said, now I'm suddenly flipping the script and going short. So the way the NIMO can be simply explained and how it was explained to me by the gentleman who brought this up to me earlier is basically when the NIMO is trading below 60, the market is oversold, which is again right over here, you'll see negative 60. And when this NIMO is above 60, the market is overbought. So if you remember what I was saying on yesterday's video, it felt like the same thing when we were buying the market, when it felt so oversold. It felt the same way when we were oversold, but now it feels like we're overbought. And I said everybody feels that way, and that's why trading has been so difficult. And we're hitting day lows and day highs and day lows and day highs and day lows, and then we grind and we're sticking by day highs, and right at the end we fall. And it's really difficult for a lot of traders. A lot of my trades have been very quickly, and even though I've been consistently profitable since the year began, which isn't saying much because today is the 5th trading day of the year. This is where I'm going to make the real money. Like I made more money on my overnight longs. I'm up more money on my stock of the year that I released on the first day of January before the opening bell of trading. I'm up more money in that name than I'm probably going then definitely most traders are up. I'm almost at my last year's level, honestly. If I wanted to stop the year right now and liquidate all my positions, I would consider myself having a good year as of this moment because we went inside a stock so heavily I mean me, we went into a stock to a point where it was just such a phenomenal move. If you read my year report, that stock absolutely exploded through the ceiling. So that's one thing. I am still in the position. I haven't sold a single share of it yet, but that's where I am in terms of the year. Like, I could just honestly, I could call it a year right now and just sit back and say, you know what, I'm good for the year. I'm just going to chill out. Um, Good news for us, I'm not going anywhere. But back to I need to show you something again with this indicator. So you heard on yesterday's video that it felt like the exact opposite of when we were buying. Like, we were just puking so much where it's just disgusting and it has to go up. And we nailed the exact bottom. I am nailing the exact top right now. And I'll tell you why. And granted, the market has been doing nothing but going up, and I am expecting a correction. So here is a weekly chart of the NIMO. What you might notice is down here, a couple weeks ago, right before 2019, is where we bottomed out on December 26th. The NIMO was actually below negative 100. Negative 60 or more is oversold. 60 or more is overbought. Right now, according to this weekly chart, the NIMO is higher than it's ever been. I don't have the empirical data going back 20 years. I'm sure I'm going to ask one of my guys, um, to run a professional back test on for me and tell me where was the NIMO the highest and statistically how many times it was. It's at 117.76 at the moment. So I just want to show you some things. So here is the first week of November where the last time the NIMO went above 60, ladies and gentlemen. Forget about 117.60. So last time the NIMO was right here, and this is this inverted black hammer bar you see here. This little black hammer, inverted black hammer, was the first week of November. So I just want to show you. Here's a weekly chart, and here, well, that's a Friday. I think it's easier to show you on the daily. So here's daily, and you could see here's where November started. It went up, and then look what happened. And coincidentally, it also went up above the 8 and 21. And this was an example we used before of when you were bearish and why we're going to plummet now in the market, which I've been saying for just the last couple of days. And I opened up positions yesterday and today, and I'll share them with you. Just stay tuned. And then you saw the market plummet. You saw the Qs go from 175.30 in 2 days to 166.18. The Qs dropped 9 points and change. The Qs dropped $9 in 2 days. Ha! That is a that is a huge drop. And obviously it even dropped further if you held it longer. I get that. Fine. Let's go back to the chart. Let's see if it was a fluke. Last time before that, the closer the NIMO got to overbought was right over there in that first week of March when it was probably over 50 right over there, and I highlighted it for us here on that arrow. So I just want to show you what the Qs, and again, use the spiders if you want. I'm just using the Qs because I like the Qs, and it will show true on the spiders as well. So here was the first week of March. We went up, and then what happened? We lifted up a little higher, and then we plummeted hard. What do I mean by plummet hard? From March 13th to March 23rd, 10 days, which equivocated to 9 trading days, the Qs went from 175.21 to 158.43. I mean, the Qs dropped 17 points in 9 trading days. The Qs were averaging almost $2 down every single day on average. On average. Now we're dealing with a situation where the NIMO is actually trading at a weekly high that really has never been seen. And the way it shot up is phenomenal, is absolutely phenomenal. And again, yes, I do have videos. I'm not telling you what I did with my IRA or I raised cash or I was telling you this. No, I could pull up probably 500 to 1,000 testimonials in the room of people who crushed it buying the bottom. There's a difference when I did it, and there's a difference where I put conviction out there to you guys and you do it. That is the difference. So I'm showing you how you could do it, and I'm going to show you what I did. I'm going to show you one more reason why the market is going to top out, and I'm going to show you if you took my trend line course just real quick, and then I'll show you the positions I'm in, right? Just have to go through the motions of why the market is also going to top out. All right, so what is a rising wedge? What is a rising wedge? A rising wedge is a support and resistance line going up, and I consider it an extremely bearish indicator. It is very, very bearish. So what you see here is, and I'm just deleting some lines here on the spider so you could just see, you could see what's happening. And again, by the way, anyone who doesn't believe trend lines exist and they try to oversimplify things and they try to hide things and you get, sucked into the vortex of how is Mark calling these day highs and lows using algorithmic trend lines. If you don't believe in them at this point, you just completely disregard statistical evidence. And if you want to try to oversimplify things in trading, if somebody says it's just simple, you just look for, you're above the moving average or below, or, 5 or 10 simple chart setups, or, my 1, 2, 3 green light system, and, you want to follow things like that. Good luck. What I'm doing is I'm taking something very complex, showing you statistical analysis on it, show you how I'm reacting to it, showing you where I got filled, showing you my positions, and then telling you what I'm going to do and why I'm doing it. So I'm taking you through every single bracket of why I've been doing this. All right. So what nobody is talking about, I haven't heard it anywhere, and hopefully somebody did, is that the spiders tested a 200 moving average on the weekly for the first time in the past 200 weeks. And this goes back all the way to April 2013. This is a weekly chart of the spider. So 200 weeks. In 200 weeks, we have never tested the 200-day moving average on the weekly spider support up until that last week where we were coincidentally calling a bottom in the market. I actually didn't use this as my empirical evidence of buying the market down there. Thankfully, I was able to garner conviction from like 7 different charts, from like Arun oscillators to Ichimoku clouds, etc. I could have also used the NIMO, and I could have used this to add 2 more reasons of why the market was going to go up, but I was already in so heavy that it didn't even matter. Just, I'm almost Captain Hindsighting this fact at this point. But the spiders did hit the 200 moving average at 234.71 and then jumped right to 258.91 in a matter of 3 weeks, or really 2 weeks, because this happened at the end of the week. Anyway, with that being said, you see this volume right here? This is declining volume on a rising wedge pushing into a weekly exponential 8 moving average. When that happens, you tend to get a very large down move, inevitable. Now, I'm not saying the mark, I'm not saying just so this is a bear flag rising wedge on the spiders, and as long as the spiders, you see we have like 300, and if you can't read that little number in the top left, we have 301.5 million shares on the weekly of the spiders. We did 565 million last week. As long as we don't do 264 million shares in the spiders between Thursday and Friday, today, tomorrow and after tomorrow, you're going to have a declining weekly volume, and that is phenomenally bearish with this setup. So those are 2 reasons why the market are going to plummet. So again, it's not only the fact that the NIMO, which is again used to describe relative strength, it's a pretty complex. You could look at it up online. It's the McClellan oscillators, what the NIMO is, and basically again, it really takes so many things into account to determine if the market is overbought or oversold. So right now, the McClellan oscillator is showing that we are tremendously overbought. I just want to mention something that when we were buying the dead bottoms on December 26th, the McClellan oscillator was also coincidentally um, under negative 100, showing that the market was severely oversold. And I just want to show you again, the last time it said it was severely oversold was after the first week of February. You see, like when the McClellan oscillator was actually lower at one point in 2018 than it was on December 26th, and it was in February. And of course, if you don't remember what happened in February, I could probably show you on the weekly here. Here was the first week of February where the spiders hit 252.92 and exploded to 275.32, which is just remember this number. It's less than 23 points. It's like 22 points in 40 cents. Let's call it 22 and a half points. And then look what happened after you bounce. You went sideways, you went up a little, and then you plummeted right there. Then, of course, the next week you went up, and then you plummeted again there. But you had that plummet week right afterwards. Fast forward to the spiders today. I mean, to get a plummet week, to think that it's impossible for the spiders to shoot lower, for the Qs to shoot lower, for all these names to shoot lower, to me is statistically a far shot. I don't want to say, I mean, anything can happen, so I don't want to say anything is stupid or smart, but statistically speaking, with the NIMO trading at the levels of where it is now, judging even of how the market acted in the past, a couple weeks later, like 2 weeks later, after the NIMO was at these levels, you are going to inevitably plunge in the market. Ladies and gentlemen, I know. I just, I have to show you something, just to take you back on memory lane, because I just want to take you back. I'm the person who does videos every day here. Woe is me, right? First off, it was Newsbeat show. This was on December 25th. This was on December 25th. I did an hour. Coincidentally, I did my longest Newsbeat show in I don't even know how long. It was an hour and 2 minutes. I did a Newsbeat show here, and it was my $100,000 bet, options bet to be the names that can bottom. And I called the entire market bottom here. And this is, again, December 25th, doing an hour video talking about, for me, a $100,000 option bet, for me, is very large. I mean, for some people out there, maybe it isn't, but for me, it's very large. A $100,000 option bet. For most people, it's very large, especially for an overnight. So that was me on December 25th. That was me on December 25th. And why am I showing you this? Because I'm calling the next trade out here, and I'm going to share my positions with you. Here was December 26th in the spiders when we bottomed out. December 25th was the day, December 25th was the day the market was closed. The day the market was closed. Qs, December 25th was right in between this day. And you know what I was saying beforehand? Look at the video before. I just need to show you because this is how I lead you into it. Well, again, you're holding me harmless for everything. This is how I'm leading myself into it, right? Look at this. This is the day before. Buy today. This was on December 23rd. Buy today. Sell shortly, easy money. Look at that. Buy today. That was on December 23rd, right over here. Well, December 23rd was obviously the Sunday right before we bottomed. You couldn't buy on Sunday, so by buying today, I obviously meant the next day. You weren't buying on Sunday, right before we bottomed. That was the video we talked about. That's how we labeled it. Now, if you look at the label of this video, and I'm going to again I'm not stalling to share my trades. I just need you to understand that I am that same, you could call me Susan if you would like. I don't care. You could say that Mark's an a-hole, Mark's a scumbag, Mark is, all these colorful words. You could like me, you can hate me, I could care less what you think of me. I just want to help you make money. That's the only thing I care about. I probably don't want to have a beer with you. I probably don't want to go out with you for dinner. I probably don't want to walk with you in the sand at night on a starry night and look out as I could point different constellations and planets out. No, that's not a star. That's Jupiter. And, I'm that nerd like that. But you know what? That's not what I'm here for. I'm here to show you why? Because conviction is the most important part of any trade. Anybody can buy anything that rips up and rips down, and people can show you, trades that they did that nobody in their room was able to follow, and everybody failed, but they were able to do it, so they look good. How about I just show you all my positions right now? Now, um, so I have a charity account. I have a charity account, so I'm going to show you just my live charity account. And again, I started with $10,000, and you could see my name here, Mark Melnick. You could see my portfolio value, blah blah blah, how they price it. But right here, maybe it'll be easier if I just show you the screenshot. It'll be like a bit bright, but right over here, let me just move my mug. Here are the positions I have. Celgene put spread was a lotto. GLD put spread, which is worth a penny, it's probably expiring worthless. And here are the goods. Walmart puts I opened up today. March 15, 95, $90 puts, debit spreads. This shows their current value. I could show you what I paid for it right around here anyway. I opened them up right at the end of the day. Low, that's Lowe's, $95, $90 put spreads for March. And the reason why I go out to March, people are like, Mark, why are you going out to March? Because honestly, I really don't care what these things are worth. I don't care if this down move comes in a week, tomorrow, 2 weeks. I'm going to make money off it. And that's the only thing I care about. I don't care if these puts are worth, if they gain 20% of their value, 25% of their value. And someone like me can throw 50 to $80,000 worth of it, and let's say it's even 50,000, and I make 20% of my money. I make 10 grand. Ooh, ooh, and the trade is over, and I move on, or 30 or 40%, right, or 50 or more. I don't know what the market, how it's going to react, but what I'm doing here is I'm just opening up put spreads. I have an EMR put spread from the other day. I have Apple from yesterday. This was the one contract I got filled on GE. I was trying to go heavier, but they partialed me. Robinhood is, despite having zero commissions, which is great, is a pain in the ass to manage. I opened up Netflix put spread today, low, Walmart, and again, so I am holding 8 put positions now as we speak, with the majority of the money being thrown in today, as I did throw in um, 3 new positions. Let's see if we could look at history. Yeah, so you could just see 4 hours ago I opened up Netflix, Lowe's, Walmart, GE. And of course, if you're a member of the service, again, we make it real easy. We send you a screenshot of my account. In real time, you see the percentage of the account I'm throwing it at. So, like for example, like I bought a Netflix put spread today. So I bought $300 puts for March 15th. I sold 290 puts and I paid $3.34 and I threw out 6%, meaning I'm risking, it's a small account that I'm giving for charity. But again, the point of this, I do go heavier in an extremely larger account. But again, the whole point is to put myself in the trenches with the people with low accounts. I mean, believe it or not, there's people out there actually telling people with like 5, 10, $15,000 accounts to go on margin. When I hear that, I'm just like, that's the stupidest fecal matter that I've ever heard in my life. Anybody who is telling you to go on margin with $5,000 in stock, what the F are you going to do with that? No, I'm serious. Like, I'm not even being an ass. Like, what are you going to do with that? What are you going to do with that? All right, you have $5,000. You have overnight margin of 2 to 1. You're at 10 grand. Or you have $2,500. You're on overnight margin 2 to 1. You have 5 grand. What are you going to do with a $50 stock? What are you going to do with a $50 stock? You throw in $2,500. You have a $50 stock. Are you going to buy 100 shares? Oh, you're going to throw 100% of your entire account at a $50 stock. What kind of money are you going to try to make on that? All right, let's say you have a $20 stock and you have 5 grand in buying power. What are you going to do with that? Tell me. tell me what you're going to do with that. You're going to buy, let's say you have a $20 stock. You want to throw, 10% of your account, let's say, of your buying power. You're going to buy 25 shares of a $20 stock. Hope that it goes up 50 cents. Well, you're going to make like 12 and a half bucks. Is that what people are telling you out there? The only way to get paid seriously and make money that is worth your time and effort with 2,500, 5,000, 10,000, 15,000, 25,000 is to trade options. And anybody who tells you otherwise is trying to sell you something or put you in a position in which they are not in. They're trying to put you in a position in which they are not in. So the whole point of me sharing this account is the truth is I'm not really in this position. I'm not really in this position. This is a charity account. 100% of the money made here goes to charity. But the whole point is of this account is to show you that even though that I have pretty much all the buying power on earth that I could ever want, I can actually put myself in the trenches with the people who are climbing from the ground up, either people whose accounts have taken big hits and they're trying to climb, whether I'm right or wrong. I'm not giving you trade ideas. Trade ideas are BS. How about I tell you the stocks? Do you guys want to know the stocks I want to buy tomorrow? Do you guys want to know the stocks I want to buy tomorrow? Would that help? Would that help if I shared the names I want to? All I see is red. All I see is red. Do you want to know the names I want to buy tomorrow? Do you guys? I'm asking you. It's up to the room. All right. Guys, easy, easy. Miriam and guys, easy. Karen, Miriam, and Angela said yes. It's cool. Okay. Women are better traders than men, and in our room, their vote counts 3 times heavier. Okay. So you might say, like, Mark, why not Apple? I'm in Apple. Mark, why not Netflix? I love Netflix. You're telling me that I'm buying Netflix on a bull flag rising wedge? Do you guys know, just to put in perspective, that Netflix, when we were buying the lows of the market, went from 231.23 to 323.35? Do you know that Netflix rallied over 92 points? Netflix rallied 40% in 10 trading days. In 10 trading days. Netflix rallied 40% in 10 trading days. And you know what I didn't do? I didn't buy it after it was up 20 points. I didn't buy puts when it was up 40 points. I didn't buy puts when it was up 60 points. I didn't buy puts when it was up 70 points, 80 points, 90 points. Now I have a reason to do it. Just like I wasn't buying the market dip in December every step of the way, getting crushed like a lot of people, and I just did it right at the last second. That's what I'm doing here. Let's go over names right now. Let's go over names right now. You know what? Lots of people could tell you that the market looks like a bear flag. Lots of people could tell you they think the market is going down. And when it does, it's one thing. I try to separate myself from them by not only showing you where I could be wrong, but I'm putting my skin in the game and I'm showing you where I'm doing it and how I'm doing it. All right, let's go over some names. I think this will work. I don't want to do it with Facebook. Facebook is just one of those names that had the living snot kicked out of it. I do not want to do Facebook as one of the names that I'm doing put spreads in. I just don't want to. I just don't want to. How many people here today heard? Well, I know you guys in the room did. How many people have you guys heard that Jeff Bezos is getting divorced? Now, I was once divorced. And let's see. So Jeff Bezos, um, there he is right there. I almost think like when I see Jeff Bezos, I almost think like he just wants to go like that, you know. How many shares of Amazon are you going to have after your divorce? 17 million shares, right? So he's been seeing a former TV anchor here, Lauren Sanchez. Um, okay, obviously, whatever it is. And he's in the midst of getting divorced. Now, why am I talking about it? Look, um, as somebody who is a previous divorcee, lots of traders have gone through it. Someone in our room going through it right now who had to leave early after the one and done to go to court. I feel you. Why is nobody scared about what's going to happen with half of Jeff Bezos' shares? Amazon is definitely a name that I would do a put spread in. Let's just keep in mind that Amazon had a little bounce off the bottom, $375 bounce off the bottom, 30% bounce off the bottom, approximately, right? A little less, all right. 30%, we're rounding off here. We're big boys. We could deal with rounding off numbers. That's a name that I want to buy put spreads in, is Amazon. That's a name that I'm probably going to attack. Um, Other names that I want to attack. Now, this is a name I think if the market falls, all these names are going to work. Depends what you're in, right? So Alibaba, I don't want China exposure. There's no need for me to have China exposure. You know what I think? Because everybody's like any day now, US and China are going to come to a deal. And according to our sources in the room, we accurately predicted that China was going to buy soybeans and airplanes by a very well connected member of our room who disclosed the information to us and was absolutely correct. And China ended up buying hundreds of billions in planes and soybeans to try to curb the trade war fears. I just think that a lot of this trade war is priced in. I don't want to buy put spreads in Chinese names. Now, yes, Baba has had in 1 week went from 129.83 to 153.35. So Baba bounced $24 approximately in 5 trading days. Yikes. I get it. It should probably pull in. I don't want to do that. I don't want to be that person. I don't want to be that person right now, shorting an Alibaba. Um, Twitter is a takeout target. I would avoid that one as well. So I'm also showing you the names that I'm intentionally away from. All the banks are reporting next week. The banks have had a magnificent bounce. It's actually ironic because we're actually buying Citigroup calls, um, during that bounce in the market. I think banks would be a good one to hit. I think I might go for, and again, I'm looking for exposure. I'm going to buy 6 to 10 names. I don't mind having one bank among them. So what I'm trying to do is diversify your assets. Diversify your put positions. I think that is one of the key things to do here. I think it's just prudent to do so. Now, I know what some of you guys are thinking. Mark, why not just take Q puts or spider puts? It could work, and I have no doubt about it. But for me, why not look for the weakest name and potentially go after that? BKNG, Priceline.com, very weak name coming off a bear flag. If this market tumbles, this Priceline or now booking could drop to $1,500, which is calling for a $150 drop of where it's trading. It's a psychotic name. I wouldn't mind being romantically involved in a booking put spread, by the way. And yes, with my $10,000 account that I opened up, a month and 2 weeks ago, I can do that with a $10,000 account. Imagine having a $5,000 margin account where you have $10,000 in buying power. What are you going to do? Buy one share of booking and you have 16% of your account on margin dedicated to that trade? No, you can't do that. Now, NVIDIA is interesting because AMD came out today and They started falling after presenting at the Consumer Electronics Show. Nvidia is just too beaten up of a name for me to want to go short at these levels. What I'm generally looking for in this market, and I think I'll be able to set a scan on it, what I really want are names that have rallied hard and have not pulled back in a long time. Those are the names that have like green bars shooting through the ceiling, names that have rallied, you know, absolutely gorgeously since this whole debacle. Like you know what, I got very light of the General Electric. We called the GE put spread on January 8th. You could see that it flushed this morning. I think General Electric is a beautiful candidate, even though it's so beaten up. I mean, the stock went from 677 to 904. It jumped $2.30 approximately in a matter of 2 weeks, which for a $6 name, $2.30 is massive. I think GE is a good one to add to. I'm going to be looking at that name to add. And I'll look for one more. I'll look for one more. There are just so many names here that have, rallied hard, like not ISRG. There's some names that are strong, like NetEase. I don't know if you guys saw, but NetEase exploded today. I'm not going to go after anything Chinese, um, even though it might make sense to have some China exposure. Don't want to go. Don't want to go with anything Chinese here because I would just have rather have the market, plummet as it wants to. Um, so maybe I'll just ask the room, guys, give me a name that has been rallying hard. The room will pick my next try. I ask the room for ideas all the time. So what name are you looking? Well, yeah, I already mentioned GE. I agree with you. Square is a nice one. Square is a really nice one. Went from 49 to 67. Square is a perfect name. Square is a perfect name to short. Netflix, you're all mentioning Netflix. I already opened up Netflix today. Obviously, I agree. Roku, yeah, Citron bashed it. A little too much drama with Roku. I'm going to stay away from that. Yes, Twilio is an excellent name. XLE short Anand. Yes, XLE short is good. Amazon is good. Oh, someone mentioned Five Below. This one is perfect. This stupid, the stupid store where you get like dollar candy and $2 candy, and it's every kid's favorite store because they have cheap candy in large bulk quantity. Five Below is the name I'm shorting. Look, the name went from 86.57 to $121.62. His name popped up just short of 50% in 2 weeks. That is a name that I wouldn't mind going short in. Oh, Chipotle Mexican Grill. Perfect. So CMG, I'm going to short. Five Below, Amazon, eBay's decent. I like eBay as well. Micron is decent, failing the 50. Truth is, there are many ideas, but CMG, Five Below, and Amazon are just three others. I think if I wasn't short the names that I shared with you in my account here, if I wasn't in all these puts right here, I would open them. Like if I wasn't in Apple, I'd open Apple. If I wasn't in Netflix, I'd open Netflix. If I wasn't in Lowe's, I'd open Lowe's. So look at Netflix, Lowe's, and Walmart. The ones I went after today. Here's Walmart, failing a 50 moving average and pulling in. Here's Lowe's, putting in a topping out red candle here. Well, I think it's topping out. I'm betting on it, right? Huh. You know. So whether I'm right or wrong, my money is where this mouth is. I honestly, despite showing you why the market is going to imminently plunge within tomorrow to the next week, I still don't feel like I brought you enough value. So I'm going to give you my algorithmic levels. There are the support and resistance levels on the Qs, Spiders, IWM, Facebook, Apple, Amazon, Netflix, and Google. These levels don't always hit. In fact, they usually don't. But when they do, they often provide good opportunities for a nice intraday long or short. Write them down, take a picture with your phone. Don't tattoo it on your face. They do change every single Newsbeat show. Just real quick, and wow, we set a record on YouTube for viewers with this video. We had over 100 active viewers simultaneously, And even though that we have, thousands of views on some of our videos, this is the first time that we had over 100 active viewers simultaneously watching the show on YouTube. So I just want to say, if you are on YouTube, definitely leave a comment. Let me know what you think about these videos in the market. Thank you. I'm very honored to humbly serve you and bring this information to you to help you navigate these markets in the same way that I consider myself a professional trader since it's what I've done for the last 20 years. Thank you so much. With that being said, how about our game plan? So, again, so much to talk about, right? Bed Bath and Beyond. It's shooting up after hours. Now, they reported earnings. I just want to go over my thoughts on their earnings. 18 cents beat the 17 cents expected. Remember what I said earlier in my report? If you're not part of the room, you didn't read the report, I'll tell you if you are not a member of the Newsbeat live service. What I said was that future revenue expectation is more important than whatever you report. You could miss on earnings, miss on revenues, but if you're bullish in the future, you go up. So they missed on consensus barely and beat on earnings per share. That's 50-50, thumbs up and thumbs down. But they saw their fiscal year 2018 earnings per share at about $2, they said, with the consensus of $1.99. So you might think that that's not a big deal, but it's actually a big deal because Bed Bath & Beyond is one of the most beaten up names. I do want to give you guys this 8 plus trigger here right into this beautiful gap fill. If Bed Bath & Beyond breaks 1536 tomorrow, you have room to get to 1875. It is a massive potential move on this daily into a gap fill right over here at 1536. That's what's going to explode your name higher. It is just absolutely amazing. So, with that being said, ladies and gentlemen, of course, I have no forex trades tonight. It literally says no forex trades tonight. I'll show you what it looks like. It sort of looks like this. It says no new forex trades. Okay. And with that being said, ladies and gentlemen, we're going to go into our full stock analysis. That is for Newsbeat Live members only. Tell me if you like this video. Tell me if you agree with me that this market drop is imminent. Tell me if you agree with my strategy of taking March put spreads to bet short on this market. Tell me if you agree with me with the names that I took. Tell me if you agree with me with anything. Tell me if you disagree with me. I am so comfortable with people disagreeing with me. I am not right 100% of the time, but I will be right the majority of the time. And I think that's what really brought me to where I am today. So with that being said, ladies and gentlemen, there's a reason why Captain Hindsight analysts swear by the Newsbeat Live Room being the largest, fastest growing trading room in the nation. Happy trading, make money. I'll see you guys next time on the Newsbeat Live trading broadcast. Have a wonderful evening.